Hi Trader, Tina here once again from ShortMeTina.com with my daily recap. So really quickly, for those that have been following and haven't heard from me in quite some time, or for anyone that's new, what I've sort of placed on myself to do is a video every single day for the month of March with the exception of the weekend. So when the market is open, expect a video. It's kind of a throwback to what I did, in 2018, 2019. The COVID-19 pandemic hit in 2020. I just didn't feel that it was quote unquote right to do videos every single day when there was so much uncertainty going around. And so that's one of the reasons that I pulled back. But I said, well, you know what? That might not be fair to those. And just excuse my dogs. They're like uninvited guests here, but whatever. Yeah, so I didn't think that that was fair to the folks that, have expressed some level of, I don't know, enjoyment with my videos. And enjoyment might not be the best of words. But anyway, so I'm back at it, at least for the 31 days in March. Not all 31 days, Monday through Friday with the exception of the weekends, all right? So I'm calling it March Blitz. I don't know why, but it's a blitz. Anyway, so I'm not going to get into much of the SPY. If you want sort of that long, detailed analysis, definitely check out the videos that I've done towards the ending of March, beginning of April. You can find it at ShortMeTina.com or on my YouTube video, ShortMeTina. So really quickly, this is the S&P 500, the SPY. We're looking at a daily chart. I really want to focus in on March of 2020 because that's when we bottomed. So all this panic that happened here, this 40% decline, on that day, March 23rd, 2020, buyers stepped in and they said, that's it, no mas, no more. And so that's why I thought that this would be actually a good starting point to draw a trend line because that day was a level of extreme, as well as when folks stepped in and said, all right, that is it. So we closed at 386.54. We should about a little less than a percentage point on the day. This pattern emerging, in my opinion, it is an inverted cup and handle, which is a relatively bearish pattern. You don't really hear too much about an inverted cup and handle, but I've seen it play out. I've seen it before, and so that's what I'm going to call it. So if we kind of zoom in on the last 4 or so trading days, right? So we basically hit this trend line on Friday. We bounced off of it. The low of that day was 378.23. Pay attention that that sell-off came actually on volume on Friday, right? Fast forward to what's today? Today's Tuesday, right? Yes, today is Tuesday. Fast forward to Monday, and we had the bounce, right? I wasn't quite sure when I did the video on Sunday night whether or not heading into this week if the market was going to rally or if we were going to have a pullback. But I did say this week should be telling in terms of whether or not the market wants to continue to go up or if it wants to retreat a little bit. And so Monday we had a little bit of a bounce, right? We were up about 2.4%. When I did that video yesterday, and I encourage you to listen to it, I said to myself, well, granted we had a bounce, right? We didn't break through this line. Breaking through this line, in my opinion, will be relatively bearish. We had that bounce up 2% on the day on relatively decent volume. But what I wanted to see today for me to say, you know what, we're quote unquote safe, is I wanted to see another green candle today, right? I wanted to see another update. I wanted us to build on that momentum from yesterday. That did not happen. Again, we're off north of 1%. And actually still trading relatively close to this important line in my opinion. So to be continued. Got to see what the market does tomorrow. It's looking relatively bearish in my opinion. And if we break this, right, if we break this line, let's call that level around 380 to 385. I'm not saying we're going to have a complete market meltdown, but we might have a minor 5 to 10% correction, all right? So I'm still very cautious out there in the market. Probably, I don't know, hefty cash right now for me, right? So that's what I'm paying attention to, this trend line that I started to draw at the March 2020 bottom, because that was the extreme panic. Folks stepped in, we held it, so I thought that was the perfect place to start this uptrend line, all right? So that's these dogs, I tell you. Anyway, hope that makes sense. What else? All right, Tesla. I've traded Tesla in and out for years, and I've been looking to get back in. So we're off about 4.45% on the day, closed at 686.44. Another trend line. This one also conveniently starts around March of 2020. These arrows are essentially every time the stock got to that trend line and then it got a bounce. So for me, this trend line is relatively strong and reliable because we've held it 1, 2, 3, 4, 5, 6 times. It could be more depending on who you're talking to for the last year or so. So this trend line is very important to me. If the stock ever gets to that trend line, what will I do? I will buy. So right now we're relatively far away from that trend line, sitting here at 686.44. It's actually bouncing off another trend line. Looks like a head and shoulder, in my opinion. Left shoulder, head, right shoulder, forming, emerging. So relatively bearish pattern, in my opinion. You couple that with what you're seeing in the SPY, and Tesla may experience a deeper correction. And Tesla is known for swift pullbacks, right? So I wouldn't be surprised if this crashed 20-30%. I'm looking to get into Tesla right now, and I'm not saying I wouldn't buy in the 600s, but considering what I'm looking at in the market, considering there's a possibility of a correction, I'm not trying to get Tesla in the 600s. If it can get down to the 500s or anywhere in there from a risk reward perspective, I think that that would be a good buy point. All right, what else? All right, and so we have Snap. It's off about 3.24% on the day. So not just the SPY, not just Tesla. We also had Snap, and I'm sure others that were down on the day. So it lost about 3.24%. We closed at 64.51. Full disclaimer, full disclosure. I'm actually long the the SPY as well. I'm also long Snap, but I've been in Snap for a very long time. I got this, I want to say sub 10 or around 10. I got it at a very low price. Have not released or let go of any of my shares. Have not taken any profit. I do believe in Snapchat. So, and even looking at the pattern, right? Looking at the chart here, it's a daily chart. You can see, and again, if you want more color and more detail, please listen to the videos that I've done in the past. I feel like I've talked about these stocks extensively. But what I like about this is, in my opinion, a rounding bottom. It took a couple of years to form from the 2017 IPO, breaking out in October of 20. Once it had this breakout and this gap up right here, it's been nothing but a complete uptrend for Snap since October of 2020. And perhaps it's showing some signs of exhaustion. So where would be good areas to go long, or even perhaps let go of the trade, right? So obviously, ideally, if it was to ever revisit or get back to that breakout base of 20, not even 20, I would say around $25, I think that would be a great point to actually go long. But sitting here at 64.51, getting to 20 something dollars, you're looking at about a really steep correction. So if this ever sells off to the tune of around 40 to 50%, I'm pretty sure something may have happened to the company. So not quite sure if it'll ever get to 2025. If it does, from a technical standpoint, it would be a good area to go long. But right now, again, I'm still holding, expecting 100 at some point. Areas that I look to add, again, it's been an uptrend. You haven't had like extensive periods of consolidations, and that's what I usually like after a stock has had an uptrend. Right now, what I think might be forming here might be consolidation after a long update with confirming volume in February. I'm pretty sure they probably reported earnings on that day. And so since then, we've kind of started to form some level of consolidation or a base, but being that it's only emerged, or it's been emerging for the past month, it isn't the strongest in my opinion. So when I look for areas of consolidation or a stock building a base, I like for it to be over a longer period of time, right? So right now, it being about a month or so since the low of, let's call that around 60 to 61 has held, that would be a good area to go long shorter term, right? if you're looking to trade a shorter term time frame. But considering this base has only been forming for about a month, I wouldn't necessarily want to go long there because my time horizon is longer. I hope that makes sense. I have a feeling like it didn't, but I do not feel or have the energy to flush that out right now. Maybe I'll flush it out another day. So looking for periods of consolidation after a breakout in an uptrend, after it broke out of a rounding bottom, which it took about 3 years to complete. So that's one area of consolidation. Another area of consolidation would be down here. So that's around that 47.50 line. So 47.50, $60, two areas to go long if the stock ever got there. All right, so that's 3 longs. I'm also looking at some shorts in the event that the market pulls back. I'm looking at Philip PM, another base you can see here forming, and how you play these channels, these range bound stocks. You definitely want a short resistance. You can see here sitting at around 85.07. Philip is actually getting to that upper end of the base, a decent area to go short because it hasn't broken out of that base or traded above that area since 18. So that's about 3 years. So for the past 3 years, the stock for the most part has remained under around $95. What else am I looking for as a short? XOM. I believe I also did. So this one is a little bit more complicated. Not going to get into this one. There's a lot of lines and I don't feel like explaining it, right? That sucks. Why do a video if you don't want to explain stuff? But I definitely did, I'm sure, a video on XOM. If you want to see that video, you might not be able to find it on ShortMeTina unless you do a search in my search bar. But definitely if you go on YouTube, it should be there. And I'm pretty sure I explained in detail why I love XOM as a short. So those are some of the shorts that I'm looking to put on in the event that the market starts to pull back, among other things. All right. So hope this was helpful. Hope I gave you some ideas. SPY, Snap, Tesla, things that I want to go long. PM, XOM, things that I want to go short. So let's cap it there because my dogs are getting feisty. Maybe one day you'll get to see them. Anyway, Tina here, ShortMeTina.com. If you enjoyed any portion of this video, do 2 things for me. 1, definitely like the video. Comment whether or not you like the video, you agree, disagree with anything. Just like and comment. And 2, right now what we're doing is we're hosting a free 14-day trading course on our website, ShortMeTina.com. I've been trading for around 20 years. I went from losing my money head over fist, however the expression goes, to gaining some level of consistency the past few years. And what I've done in that free 14-day course is sort of talk about some of the things that has helped me along the way, or just to try to make the stock market a little bit easier for folks that are now starting out or who have been trading for a while but just has not seen any level of consistency. So if you're interested in that, definitely head on over to our website, ShortMeTina.com. No credit card is needed, just an email address so we can know where to send the information to. All right, so ShortMeTina.com if you want that information. Thanks for the support. Thanks who's ever still here listening, and I will talk to you tomorrow. #MarchBlitz.